Vacancies remained unchanged at the national level for office properties across the United States in the second quarter of 2015. We were stuck at 16.6%, unmoved since the first quarter, where completions of 8.3 million square feet roughly mirrored the net absorption rate, or the net increase in occupied stock, of around 8.4 million square feet. So that really didn't move the vacancy rate all that much. Asking and effective rents also grew at 0.7%, both of them at a relatively healthy level, but still not stellar compared to the kind of rent growth that one can manage in this sector were conditions a bit healthier, where job growth could be at 250 to 300,000 per month. We're not quite at that rate for 2015, though economic conditions are pointing to more activity, hopefully, as the months pass. When you take a look at subsectors within the office sector, clearly not all of them are created equal. Suburban vacancies remain stuck at 18.3%, whereas central business districts are at 13.3%. Now, to be fair, about 80% of all new construction from 1990 to 2010, over 20 years, happens in suburban areas. So we're talking about larger inventories here compared to CBDs, where we couldn't build a whole lot unless you rezoned things. But with that said, during the Great Recession of 2008-2009, suburbs really took a hit. Suburbs lost anywhere from 135 to 150 million square feet of occupied space. That's equivalent to the entire office market inventory of Boston. And it's been slow going since then in terms of the recovery. Now, when you take a look at other markets, we're doing okay for some of the typical tight markets like New York, but a market like Houston was really hit fairly badly by the recent bout with low energy and oil prices. Houston vacancies are now at 15.6% as of the second quarter. That's a 50 basis point increase versus the first quarter, and year over year, vacancies in Houston have risen by 120 basis points. So while things remain tight for a lot of gateway cities like San Francisco and New York, places like Houston are reeling fairly directly from macroeconomic events that directly impact the kind of demand for jobs as well as office space in that particular geographic area.